Hi and welcome. And in this video, once again, we're going to be looking at macroeconomics. And what we're going to do is look at a number of expressions and concepts, so economic indicators that talk about the health of an economy. Now, this will help you to be able to discuss and describe current and future economic activity. So the first thing I'd like you to do is look at these 6 abbreviations. We've got GDP, GNP, CPI, BOP, BOT, and FDI. Now, do you know any of these expressions or these abbreviations? Have you met them before? Do you know what the expressions are in your own language, and can you define these expressions? So let's go through them step by step. And the first one we're going to look at is GDP, which we have met before in this video. Now, GDP stands for Gross Domestic Product. If we look at this diagram, Gross Domestic Product describes the total value of goods and services that are produced in a country in a specific time period. And it doesn't matter who owns the means of production. So we're going to look at this map in 2 or 3 examples. And we've got the blue country, the green country, the yellow country, the turquoise country, and the pink country. And we're going to be looking at the country A, which is the blue one. So gross domestic product will describe all the value of all the manufactured products and all the services provided within that country A. And it wouldn't matter if they were provided or manufactured by citizens of that country or by foreign nationals or foreign companies. This is GDP, and if we look at an example, so in the last few quarters, China's GDP has been growing at half the rate of the US. The US GDP margin over China means that the comparable rates of GDP growth in the future will sustain and even widen the margin. So it's comparing the GDP, the value of goods and services produced in China and the US. Now, if we move on to GNP, we will see that this is slightly different. So GNP stands for Gross National Product. Now, gross national product is an estimate of the total value of goods and services that are produced by a country's citizens or its residents, and they're produced in a certain time period. So let's look again at this map. So we've got this map with the countries A, B, C, D, and E. Now, gross national product will not include products manufactured or provided or services provided in country A, for example, if they're provided by residents or citizens of country C or E. But if a resident or a citizen of the country A produces products or provides services in country B or in country C, for example, then this will contribute to GNP. And this will then bring us on to the idea of FDI. Now, FDI stands for Foreign Direct Investment. And foreign direct investment is the buying or the purchase of an interest in a country by an investor located in another country. So if a citizen or a company in country B buys something in country A, or again a citizen or a company in country E purchases a company in country A, then this is foreign direct investment. Now, this will bring us on then to the idea very briefly of mergers and acquisition. You should know the difference between a merger and an acquisition. Now, a merger is the bringing together of 2 companies. So there could be a company in country E and a company in country A, and the two companies kind of fuse together and they become equal partners in a new company. Now, an acquisition is quite different because this involves the taking over of another company. Usually a bigger company, not always, a bigger company taking over, buying another company. So these are mergers and acquisitions, sometimes called M&A for short. So let's move on to some other indicators. The next one that we should look at is CPI. And CPI stands for Consumer Price Index. Now, the Consumer Price Index is an index that measures the monthly changes in prices that are paid by consumers. That's you and me for certain goods and services. And what it does is it takes a theoretical basket of goods and services and it compares the prices of those goods from month to month or maybe from year to year. And if prices rise, this is a sign of inflation, and if prices decrease, this is an indication of deflation. And if we talk about Consumer Price Index, then we should probably talk about purchasing power. And purchasing power is to do with the value of a currency and the number of goods and services that you as a consumer can buy with that currency. So if your currency has a weak value, then you can buy fewer goods and services. And if your country has a very strong currency, then you can probably buy more goods and services. And again, to give you an example, the drop in the Consumer Price Index figure was slightly larger than expected by most analysts, who forecast that the annual means yearly rate of price rises, would slide to 10.9% last month from 11.1% in October. Okay, so let's have a look at the final two indicators here. And the first one will be the balance of payments, BOP. Now let's have a look at an example. The balance of payments with the rest of the world, which measures all flows of money in and out of the country, widened to 4.2% from 2.3% in the second quarter as exports fell. So that's money flowing into the country, and companies receive more income on their holdings on equity investment, money flowing out of the country. So this is what balance of payments is. It's the difference between the money flowing into the country and the outflow of money to other countries in a period of time. And this will bring us to the words deficit and surplus. So if you have a plus figure, then this is a surplus. And if you have a deficit, this is a minus figure, which will bring us on then to the next example, which is BOT, which is linked to the BOP, which is the balance of trade. Now let's have a look at this example. So figures show the country experienced its biggest positive turnaround in the balance of trade, BOT, since 2010, with surging, rising, rocketing iron ore and coal prices, swinging it from a $1.1 billion deficit in October to a $1.2 billion surplus in November. So the balance of trade is to do with, it's the difference between the value of a country's exports and imports in a period of time, and it's a component of the balance of trade. So these were the 6 abbreviations that we looked at the beginning of the video. And now let's move on to some other expressions and other concepts that you should be familiar with so that you can take part in your business English course and that you can answer questions on any exam. So let's have a look at these concepts. And the first one I would like to deal with is the cost of living. The cost of living is to do with the amount of money that you need to pay for the basics in order to live. So this would include things like your housing, your food, healthcare, and taxes. And again, we can look at an example here. So the consumers cut their spending last month as the cost of living crisis damaged household finances at a time when there is growing concern of the impact of high inflation on the economy. So the cost of living is rising and rising and rising. There is inflation, prices are getting higher and higher and higher. And if prices are getting higher, then people are getting less for their money and they cut their spending on other items. So this will bring us on then to two other concepts. And the first one is the standard of living. Now it's important to recognize that the standard of living is to do with the wealth of individuals and the amount of comfort that individuals can buy for the money that they have. It's to do with, we can really think about this as material comfort. And this is very different, for instance, to the quality of life. You should separate the two in your head. The quality of life is much more to do with things like economic and political stability. Do you live in a comfortable, safe environment? Is it clean, or is there pollution? Does climate change, does that affect your environment? Does climate change mean that you have a really unsafe and unpleasant environment to live in? Do you live in an environment where there is freedom, there is the freedom to vote for different political parties? Do you have freedom of speech? Can you say what you want? Do you live in an environment where there's a war, or where there is peace and stability? All of these things are to do with quality of life. So let's come on to some other factors, and the first one is minimum wage. And the minimum wage this exists in many economies and in many countries, and the minimum wage is the lowest wage per hour that a worker can be paid according to the law. Then we have the expression hidden economy. Now, a hidden economy exists in many countries to a greater or to a smaller extent. And a hidden economy is when people are getting sources of income and they're earning money, and maybe they get what we call very often cash in hand. They do a job and they're paid in cash, and they never declare their income for tax or other contribution purposes. This is a hidden economy. Then we should look at the difference between then a disposable income and a discretionary income. So first of all, let's look at disposable income. Now, disposable income is to do with my salary. So every month I get paid a salary, and the salary that I'm paid by my employer is a gross salary. Now, in most countries, what will happen with that salary is then I have to pay a certain amount of that salary for tax, usually some kind of income tax. It can be in other countries that you have to pay for probably healthcare or some other kind of social contributions, and these are taken from your salary. And you get some kind of statement that outlines your gross salary, and at the end there is a net salary, and this is the money that's paid into normally your bank account. And this is then your disposable income. This is the money that you have to pay. Now, disposable income is a little bit different to discretionary income, because discretionary income goes one step further. So we have the same situation again. There is the gross salary, and then deductions are made for tax, healthcare and other contributions. But there are certain staples, there are certain standards that I need in order to live from day to day. And these would include, for example, things like rent, the money for utilities, electricity, heating, water, clothing, food, transportation. These are the things that I have to buy every month. And then, so once I've got my gross salary, the deductions are made, and I've got my net salary, and then I buy all the things that I need in order to live and to work during a month, then I have my discretionary income. And this is the income, this is the money that I have to spend on other things. Okay, let's finish with two final concepts that we should also be familiar with. And the first one I would like to deal with is the idea of employment and unemployment. Now, employment and unemployment are often expressions or concepts that are used by governments to talk about the health of an economy. And employment is to do with people having work and being in work and getting a salary for work. And employment figures go up and they go down. Now, when a lot of people don't have work, then it's the opposite. This is unemployment. And when unemployment is very high, this can be an indicator that the health of the economy is not very good. Okay, and to bring us to the final concept, this is the concept then of visible and invisible trade. Now, visible trade are things that I can see. They're things that I can touch. And visible trade is all the things that I can buy in an economy. They're all the things that are very physical. They're manufactured goods and things like raw materials. Now, invisible trade are all the things that I can't really touch. This would include things, but they bring in an income for a country. Things like banking, tourism, other kinds of services. I've given the example here of education because sometimes we forget about education. If you think about the whole concept with international students and student exchange, this brings money into a country both in the short term and into the long term. Okay, so what we've done in this video is look at a number of indicators and concepts and expressions. Now, whether you know about these concepts will really depend on what you've studied before, what you're studying now, and really what you're interested in life. If you already know these expressions, then make sure that you do know them and that you can explain them in English. If you're not very familiar with these concepts and you're not very sure about some of the ideas behind some of these expressions, the first thing I would do is probably check what these expressions are in your own language. And when you look at the expressions in your own language, do you know these expressions, and can you think about how the media talks about these expressions? When you're very comfortable with that, then I would begin to learn the expressions in English and think about the expressions in English. Certainly think about whether you can define the expressions and you can talk about them. And I would really make sure that I know what these abbreviations, what these initials stand for. So that, for example, if I was given in an exam a text and the text had the abbreviation CPI in it, I would know, and I wouldn't have to waste much time knowing immediately that that's the consumer price index, and I would know what the consumer price index is and how it is used as an indicator of the economic health of the country. Finally, what I would do then is go then to the English-speaking media, be that newspapers or videos or news clips or news channels, and just have a look at these texts and listen to these videos and see if you can listen out for these expressions and see how they're used in the video or in the text. So that was all I wanted to say in this video. I'd like to thank you once again for listening. Please have a look at my other videos on this Business English course for B2 C1. If you've got any comments or you think that you know other indicators that I haven't mentioned or that I should have mentioned, please put them in the comments below. And I look forward to seeing you in the next video.